Okay, picking up where that last video left off on the next slide, there are special incentive plans that are kind of designed by the employer to entice the workers to produce more. So maybe those could be like if you make over 10,000 pieces in your shift or over 500 pieces in an hour, then anything over that 500 pieces or whatever is going to get paid a premium. It'll get paid extra. So then you'd have to obviously compute it based on those deferring quantities. So the first quantity would be at so many, like if you look down below, the first quantity would be 2,000. It's going to be paid 18 cents a unit. Then if they can go above 2,000 up to 3,500, they're going to get 24 cents a unit. And then anything over 3,500, they get 36 cents. But it's like a tier. So again, you'd have to do 3 separate computations. The first one at the 18 cents, then the next level at 24, and then anything over that at 36. Commissions, again, like real estate agents are paid commissions. Some salespeople are paid only commission. Like car dealers are paid commission plus normally some sort of a salary. So it depends on what type of sales job it is if you've got that salary along with the commission. Then, so they give us an example down there where, again, they're going to show us how much they sell. If they have a quota, the quota means that's what they expect them to sell based on paying them that annual base salary. They're only going to get paid for any sales above the quota. So again, it's kind of that same type of incentive to say, we expect you to sell so many. If you go above and beyond that, you'll get 2% of that excess. So then if we look down below, his sales were 40,000. He had the quota of 31,000. So the difference of the 8,500 is what he'll get his commission rate of 2%. So that's going to be $170 added on to his base salary. Bonuses and profit sharing. So bonuses need to be a part of their wages and taxed accordingly, and are also calculated to make sure they're receiving minimum wage. Profit sharing plans are where you're going to share in the corporate profit, like maybe at the end of the quarter or end of the year. And those normally don't go into any type of computations for minimum wage. Sometimes like the oil and gas, or not the oil and gas company, but the plastic injection molder, that smaller business that I worked for, at the end of every year, he didn't have a 401k or a retirement plan for us. He did that profit sharing. So if we had a good year, he set up so much money, again, based on our salary levels or our income levels, and put that money into a retirement account that they set up for us. And that was not part of our wages or our minimum wage computations or anything like that. Okay, so then that completes the chapter. Again, sorry that it is in 2 different videos.